Hello everyone and welcome to the YouTube channel of Being ACCA. This is Tushita Gupta, ACCA affiliate, and in this video we are going to be continuing with the solution of the FM pre-December 2024 mock exam. We have already done the very first scenario-based question from section B. Now this is the second scenario-based question from section B. The name of the company is Sunrise Enterprises. Let's get started. I'll first quickly read the scenario. So the scenario says Sunrise Enterprises is contemplating making an offer to acquire Horizon Industries. It is expected that upon completion of the acquisition, the current management team of Horizon Industries will retire, paving the way for new leadership. This transition is forecasted to generate pre-tax salary cost savings of $30,000 per year. Since Horizon Industries is not publicly listed, a published price to earnings ratio for the company is unavailable. However, Radiant Innovations, a comparable entity to Horizon Industries, currently boasts a PE ratio of 9. The following is the statement of financial position of Horizon Industries as at 31st December 20x6. So you have non-current assets, current assets in which you have inventories, receivables, cash at bank, and then you have equity and liabilities. You are given with the ordinary share capital, reserves, 10% loan notes, and then current liabilities. Under that you have payables. So there is some additional details which are given. Non-current assets have not undergone revaluation for several years. It is estimated that their current replacement value is $300,000. Next up, $10,000 worth of inventory is considered obsolete and it could be sold for $1,000. The earnings per share of 20x6 amounted to 85 cents with a corresponding dividend per share of 45 cents. The applicable corporate tax rate stands at 30%. So this is all the information which has been given to us. Now let's read the first requirement. First question wants me to determine the base equity value for Horizon Industries using the NRV basis, the net realizable value basis. So we have to find out the value of equity. So equity is always equal to your total assets minus current as well as non-current liabilities. So I'll first take the total of the total of all of the assets. So the total of all of the assets, as I can see, is that firstly for my non-current assets, I'm going to take 300,000 because the value which is given in the books, it is very old, and the replacement value is a relatively that value which is achievable in the present day. So I'm going to take this for that. Similarly, when it comes to the valuation of inventories, I am told that 10,000 worth of inventory is obsolete and it would only be selling $1,000. That means from this value of 35, there's a decrease of 9. So that gives you 26,000 as the value of your inventory. Then you have 20,000 of receivables. No other information given with respect to that. So we will take that as it is. Similarly, cash will be taken as it is. Now, this is what we have as the total assets. From this, we need to subtract all the liabilities that are there. Liabilities are loan notes, which are 80,000. Then you have 18,000 of payables. So the final answer is going to be 250,000. 250,000. So this is what you will enter and move to the next question. All right, so this is the second requirement pertaining to this scenario. Based on the most recent earnings per share, what is the equity value of Horizon Industries using the PE ratio method? So according to this method, we have to take the earnings, we have to take the number of shares, and that will be multiplied by the PE ratio. PE ratio for this company is not given, but we can take the substitute one, which is 9. So 9 needs to be multiplied by how many are my earnings? My earnings were given to me as 85 cents. So again, let's open the calculator. It is 85 cents, which is the earning. So 0.85 will be multiplied by 9. Now this further needs to be multiplied by the number of shares. How do you work out the number of shares? If the total value of your ordinary share capital is 25,000 and one share is worth 0.25, that means you would be having 25,000 divided by 0.25 number of shares in issue. So this gives you the equity value to be 765,000. You select your answer and move ahead. The third requirement, let's have a look at that. The platform seems to be working slow today because probably, it's peak time towards the exam, so lots of students are accessing it at the same time. All right, here comes the third requirement. Which valuation method would be advisable for Sunrise Enterprises if their intention is to purchase Horizon Industries and subsequently dispose its assets individually? So let's have a look at it. You are given with the options of dividend valuation, net realizable value, and PE ratio method. So when it comes to the selling of the assets, this specifically relates to the NRV method because that is exactly what we do. What's the meaning of NRV? Net realizable value means what amount of money will you be able to generate, will you be able to get if you sell off the assets? So the answer is net realizable value method. Moving ahead, Industries finance manager believes that their actions will directly cause an increase in earnings and a corresponding rise in the firm's share price. So, what behavioral finance concept does this belief exemplify? No, this is not overconfidence. This is also not excessive optimism. This is rather the illusion of control. We have studied that when it comes to behavioral finance, there's a concept called the illusion of control where someone estimates their influence on the final outcome. So, which leads them to make irrational investment decisions, potential losses. So here they are thinking that what they do is going to cause such a big effect, so they have an illusion of control. Confirmation bias is another concept wherein, let's suppose you have made an investment and you look for information which supports your view. So you will specifically go out to search. Let's suppose you are thinking that the stock price will go up. So you'll constantly search, look for information that reflects that share price is going to go up, just to confirm your bias, just to have that mental peace that yes, you've made the right decision. And you will on purpose ignore any fake or bad news, any negative news about the company in which you have invested. Moving ahead to the last question for this scenario. So here's question number 25. Which irrational behavior of investors involves following the crowd, often leading to stock market bubbles? This is the very definition of herding. What happens in herding is that people follow each other. Herd is referred to a herd of probably goats, because goats always wherever the herd is going, all of the goats will go there, no matter if there are, even if there's danger ahead, they just follow each other. So herding is similar to that in that senses. We are saying that investors will be following the crowd, whatever the others are doing, the people will also start to do the same thing. So that is what is herding. This is the exact definition. Here, the investors follow the crowd instead of making their own independent analysis or taking their own decisions. What will this create is that if let's suppose the herd is buying one stock, so a lot of people end up buying the same stock. What happens is that even if there's nothing so good about that stock, because the demand is so high, it starts to increase the value, like increase in the value is seen. But because there is nothing actually so good about it, that increase is only false, it's only a bubble, it's going to burst away sometime, because there's no actual good thing about that share which made the price go up. So herding is going to be your answer here. Semi-strong form efficiency, these are the different efficiencies levels that are there of the market. You would have studied about that. Market paradox, loss aversion, these are all concepts of behavioral finance which you all would have I hope that you would have studied. So with this, we are through with this scenario, section B scenario, Sunrise Enterprises. In the next video, I will be coming up with the third section B scenario. So stay tuned for that.